All relative to expectation, right? So I think coming in, there was a lot of expectation that we might see a decline in earnings in the first quarter. Then we adjusted to 0 to 2%.
You do still have negative earnings growth. It's a matter of whether you're going to get a recession and so-called, 2 consecutive quarters of negative
selectively.
They've been better than expected.
Correct, and that's what it's about. It's about the delta relative to expectation, and I think that's been really helpful. I think we think the U.S. market is fine. We're being more selective within U.S. We're focused more on technology and financials right now. Technology has been the absolute leader. It's been a great trade, but we're also more optimistic on the global economic recovery, and we're seeing value outside the U.S. I think growth in the U.S. or the trajectory of markets in the U.S. is probably going to slow a little from here. We rebalanced. We were overweight U.S. early in the year, and now we've totally pivoted, and we're overweight EM in Japan.
Interesting. And Brenda, you're about 8 points or so off from an all-time intraday high. This an opportunity to scale back some of your positions or add to because you think we blow through and then who knows where we go?
Yeah, obviously, we've had a tremendous recovery, especially since the December lows. So we're off, we're around 25% since then.
For the S&P.
Huge. But I would argue that when companies gave first quarter guidance, we were in a much different market environment. And so there was a window that was open for them to be overly conservative. And so now we're having the beats that are coming through so far. Still early, though, you could say, in this earnings season, although really kind of in the thick of it after today and tomorrow. But nevertheless, I think we have to ask ourselves, what kind of multiple are we going to apply to this market? And what are earnings going to do? So we think there needs to be more than just a Q1 earnings beat to get this market moving from here. We need to get confirmation that the global economy is stabilizing, and we have gotten some of that confirmation recently, but we need more. Also think we need some resolution on global trade. But I would say that even if you make the argument that this year the low single-digit earnings growth estimate is too low, and maybe we get a more normalized earnings growth in the mid-single-digit range, and then have another mid-single-digit growth year in 2020, it still gets hard to argue for more than potential 10% upside from here.